Right, we've made it to the last video related to receivables. And we are going to look at what's called a dishonored note receivable. So in the previous videos, at maturity, we always recorded that a collection was made. So we received the cash. But this doesn't actually always happen. So if you get to the maturity date and the other party is not able to pay you, it is called dishonored or a defaulted note receivable. So make a note. You may also say that someone was on default or was a defaulted receivable. So it means the same thing. So if you hear in a question that it was honored, the note receivable was honored, that means you collected it. So the full amount was paid at maturity. You just record collection of the cash. But if you have a dishonored or a defaulted note, it means that the amount is not collected at maturity. So you get to that maturity date, but the other party is not able to pay you. So the note has ended, and therefore we need to move the amount out of the note receivable and put it somewhere else. And there's two options where we may move it. So you get to that maturity date, and at that point, the other party isn't able to pay you, but you think that there's still eventual collection expected in the future. That's this first option here. We would move the amount from the note receivable and transfer it into accounts receivable. So we still think we're going to get it, but since the note has expired or ended, we put it in accounts receivable so our collection team knows about it and they can try and get that money. However, if you get to the maturity date and maybe the other party's gone bankrupt, or for some reason you just don't think you're ever going to see that cash, so the eventual collection is not expected, this is the second option here. You just write off that amount. So instead you move it out of the note receivable and just record it as a bad debt expense. So let's look at a couple examples. The first one here says on July 31st, a 6-month 10% note receivable for $5,000 is dishonored, but it is expected that the debtor will eventually make a payment. So we eventually think we're going to collect this amount. We need to assume that no interest has been accrued to this point. So the entry on July 31st, where we think that will eventually make or have a payment made to us. So eventually we're going to collect that amount. So if that's the case, we're just transferring the amount into accounts receivable. So we're going to set up this accounts receivable so that, as I said, our credit department, they can track that money down. And we're transferring this from or removing the notes receivable, and we do that by crediting it. So we credit the note receivable for the principal amount of the $5,000. But since no interest has been accrued yet, we also need to recognize all of the interest on this because we think we're going to get that. So we're going to credit interest income, and we can calculate that amount. So we take the principal amount of $5,000 times our interest rate of 10%, and then we always have that factor of time. So now we have 6 months out of 12 because we're looking at how many months is a full year because this is an annual interest rate. So over this 6-month note, we have earned $250 of interest. So we book that as income, and we debit accounts receivable for that full amount. So we're going to try and collect the full $5,250. And our note here would be to record dishonored note we'll say collection expected. So that's why we're putting it into AR and recognizing the interest. Okay, so that is when eventual collection is expected. Now, if eventual collection is not expected, so exact same question here, July 31st, 6-month note, 10%, $5,000, and it's dishonored. But now the debtor is unlikely to ever repay the amount. So we don't think we're ever going to collect this. And again, we have to assume no interest has been accrued. So the entry on July 31st, when this note is dishonored, instead of moving it into AR, since in this case we now don't think we're going to collect it, we're just going to write it off. So we'll debit bad debt expense. So we're just completely getting rid of it, and we're going to credit the note receivable. And in this case, we don't think we're going to get the amount and no interest has been accrued. So if that's the case, nothing's been booked, we're just going to record the bad debt expense at the amount of the note. So we debit that for the $5,000. And we would say to write off dishonored note. And I'll just make a note, no interest booked if no collection expected. But here's where you need to pay attention here. If we had accrued an amount of interest already, that's where you would now need to get rid of the interest receivable. So in this case, no interest had been accrued, so we're not going to book any. But say this company had an August year end, and at the end of August they accrued 1 month of interest, we would have already recorded that income and we would have an interest receivable. So if that was the case and something had been accrued, we would also need to credit interest receivable to get rid of that amount that was booked, and therefore our bad debt expense would include whatever interest had been accrued. So we'll make a note here. If already accrued interest, you need to credit the interest receivable. So get rid of the amount that's already been accrued. And then you will add, sorry, so I'll just put it over here, and add the amount to bad debt. So you still don't accrue any additional amount or record any additional income, but anything that had already been accrued, we need to get rid of that receivable because we're not going to collect it, and we just increase our bad debt expense by that amount. Okay, so that is it for our receivables chapter. We went through accounts receivable, the allowance method, and how we look at estimating our uncollectible amounts, as well as what happens when we actually write those off, and then if there's a recovery. Then we looked at note receivable, so how we set them up, how we accrue interest, and then at maturity, how we record the collection, or how we get rid of them if they are dishonored. So below the video, I have a couple of examples noted that you can practice for notes receivable. So go ahead and try those out and then watch the solution video once you've tried them on your own.